Hey everyone, welcome back to the channel. Today we're going to go ahead and take a look at Coca-Cola. I think this is an interesting one. Coca-Cola has obviously been around for a very long time, founded in 1886, headquartered out of Atlanta, Georgia. CEO James Quincy is actually a long-term employee. I believe he joined the firm in like 1998 or something, and before that he was a partner at McKinsey or Bain, some consulting firm. CFO John Murphy, similar story. I think he's been with Coca-Cola since 1980 something, 88, 86, something like that. So a lot of the leadership is long-term employees, but current stock price is 53.88. They trade under the ticker KO, not to be confused with Coca-Cola bottling, which trades under the ticker um, Coke. So just for reference, there's also Coke. I know as a retail investor, some people may be confused about what the difference is, and we'll definitely touch on it in this video. But you'll see the market cap here. It's a $3 billion company. Coca-Cola consolidated, so it can definitely be a little confusing at times if you don't really know what you're looking at. So it is the ticker KO. Warren Buffett, I think, I don't know if he still holds a really big position, but for a long time, he owned a lot of Coca-Cola. He really likes the company. It pays a dividend every year that they increase. And here's some of the revenue numbers. You can see it's kind of basically flat since 2018, 34.3 to 33, but they have become more profitable, and we'll touch on that. And a little bit about Coke. So most consumers think Coca-Cola. You probably assume they manufacture bottles of Coca-Cola and then sell them to distributors and retailers. And that's not quite the full picture. Really, what they do is they have a network of independent bottlers that they sign contracts with, and then they sell what they call concentrate. And so the concentrate is just kind of, I'm guessing it's like a 10-gallon drum of Coca-Cola special recipe syrup, right? And they sell that, and then from there, the bottlers will add water and sugar or whatever kind of sweetener is needed, whether it's like a Diet Coke or a regular Coke, and then from there, the bottler will bottle it and then worry about the distribution aspect. So Coca-Cola is more of a advertising company than it is a consumer good company, I would say. If you really think about what Coca-Cola KO does. I think their biggest expense as well that we'll look at is advertising. So just something to keep in mind. Some recent news stuff. They announced the 59th consecutive annual dividend increase to $1.68 a share. They announced their full year 2020 results back in February. They announced they're now making, I think it's like some 14 ounce or 12-ounce bottle, 100% from recycled materials in the US. So we'll touch on that a little bit in the risk and opportunities, why that's kind of big news or could be big news. Um, they also, in January, they named Michael Ludig, who is a former judge, as a counselor and special advisor to advise Coca-Cola in its ongoing litigation with the IRS. We'll talk on that in the risk and opportunity as well. And then in August of last year, they actually re-entered the alcohol business, something that they had exited for a long time, I believe. Back in the 70s or 80s, I think they owned a winery. But in the US, at least, it's never been kind of a core focus for them, and it's still not really. But they launched a Topo Chico hard seltzer. I'm not sure if it's available in the US or not. I don't think I've seen it at the local supermarkets, but it may be on shelves now. But we'll touch on that in the risk and opportunities as well, because that could be a big opportunity for them. And then um, something else just to note, in August of last year, they announced a strategic transformation. And, at first glance, I thought that this was really what was driving the increase net income for the company. So you can see it was going to cost 550 million, and when we look at the financials in the second video here, when we do the DCF, their SG&A cost at first glance is lower, and I was like, oh, this is that strategic transformation. This is great. But there's a little bit more to it, so we'll touch on it there. But some of the biggest risks and opportunities, I think, for Coca-Cola, the first one is just health concerns. So general consumer trends, I think we've seen a big trend away from consumers wanting to drink sugary soda. And maybe that's not across the world because they are global, right? They're in 200 countries and territories, but in the U.S. for sure, I think we've seen a little bit more health conscious shopping from consumers. So that's something to consider. If that trend continues, but they have entered sparkling water market and they have a handful of different sparkling beverages now. There's also environmental concerns. They have a huge environmental impact, just plastic and aluminum. And even though Coca-Cola, KO, is not directly, the one making all these bottles and waste, it really is their branded product that their independent bottlers are selling to distributors that causes it. So it's definitely something to be concerned about. A big concern would be independent bottlers. If they face, financial risk, financial tough times, right? If one of their largest bottlers were to go down, could really impact their ability to sell to direct markets. And Coca-Cola has been known in the past, if a bottler is struggling, they'll come in and they'll write a big equity check and take a big stake in it and help turn it back around. And then once it's up and running and profitable again, they'll sell their portion back to the business. But definitely something to consider when thinking about it. Water supply, obviously, I mean, I think this one's a little, I don't know how I really feel about it. But if you, like Michael Berry from The Big Short or whatever, right? He's saying there's gonna be like a water shortage. So he's trying to like trade water futures or something through farmland or, something like that. So if there ever really was a global strain on the water supply, Coca-Cola would be done for. It's not an essential product from that standpoint. But I think if we're having global water issues, there's probably a bigger concern. But could be something where a local bottler, maybe wherever they get their water supply, if there's anything contaminated, that could also be a risk to consider. Um, Alcoholic beverages. So we kind of touched on this in the recent news. They're not really in the alcoholic beverage market, and if we go to like if you type in like Coca-Cola brands, um, they show on their website like their list of brands. Where is it? Is this it? Brands. They have, I think it's, what is this, 200, 130 plus brands. But like they don't show necessarily alcohol brands on here. So it's definitely not a big portion of their business from their point of view. I don't know if that's good or bad, you know, but I think it's definitely a big market that could be tapped for them. Um, but part of that is they don't want to be, in the sense, they don't want to be a manufacturer of beverages. They want to be a marketer of beverages, and they just want to sell basically their secret formula of Coca-Cola to their bottlers. So something to keep in mind as we kind of talk through it. So it might be hard for them to really make a big push. And I actually think in the US, it said in their 10K, yeah, I have the comment here, they entered into licensing agreements in the US. So that's kind of what I would expect them to do, is to license the Coca-Cola, the Sprite, those kind of brand names, the Topo Chico, to like the Coors of the world, and have them be the producer and the manufacturer. And then once again, it's just a marketing effort from Coca-Cola, the parent company here. And then the last thing to talk about is just taxes. So they are in like ongoing litigation. I think it's from like 20, I want to say it was like 2012, 13, 14, or 13, 14, 15, something like that. But the IRS audited them and said they owed $3.3 billion in back taxes. Coca-Cola says they don't. Litigation started in 2018. They just hired a former judge who kind of like specialized, I think, in tax-based stuff to come be a special counselor and advisor to the company on this battle. So however that shakes out, it could end up being costly. It could cost, what I mean? They could spend, $100 million on legal fees and then still have to pay part of these back taxes, or even more if the IRS decides like this is where they're drawing the line. But I think the IRS probably has bigger fish to fry, but something to consider. 1 year in the future, there could be a really wonky impact to their cash flow. Just something to consider. They could, $3.3 billion is not a non-material amount of money. That's half of their net income. So it would definitely be something of note in a future year, but that really kind of highlights the company. There's gonna be a part two here. We'll jump over to a DCF, and I think Coca-Cola is actually a very fascinating company from a DCF perspective, just from the business model. So hop on over there, leave any questions or comments you have below, and happy to engage in any discussion or conversation. Thanks.